You've used moving averages to try to spot trends before, right? That's right. They're one of the most popular tools among traders all over the world. But what if I told you there's a much more powerful way to analyze these averages? All in a single indicator? Today, you're going to discover a real upgrade for your analysis, an indicator that turns 11 different moving averages into a static, precise, and visual oscillator. To start, we're going to use TradingView, which is the platform we need for this indicator. You can choose whichever chart you prefer. I'm using the Euro to US dollar on the 1-hour time frame. Click on Indicators and search for Moving Average Z-Score Suite, just like you see on my screen. It'll be this option from Beck Quant. Just click it and you're done. It will show up here on your screen. And it doesn't matter which asset or time frame you use, it works on all of them. Now I'm going to show you what makes this indicator stand out. It brings together 11 types of moving averages that you can choose from, ranging from the classics like the simple moving average SMA and exponential to the whole moving average, the T3, and even linear regression. You pick what works best and fits your trading style. But the secret lies in the histogram called Z-score down here at the bottom. It turns the chosen average into a standard deviation chart, meaning it shows you when the price is statistically far from its average. When this histogram crosses above the +2, +3, or below the -2, -3 deviation lines, it signals extreme levels of overbought or oversold, which are even highlighted by these red and green zones. It's exactly in these extreme zones that the market tends to reverse. A histogram way above the +3 line, for example, suggests that the asset is overbought and might be about to drop. The same logic applies to the opposite side when the histogram is way below -3, and then the chart can start to rise again from that point. Besides that, the indicator lets you spot both hidden and classic divergences. And here I'm going to show you how to do that. Click on the indicator settings and then click on this tab. Hit OK. Now it will show you divergences with these signals down here. And this is where our strategy comes in. When a bearish divergence appears, for example, you don't enter the trade right away. First, wait for the price to break the most recent low, and that signals a real change in the market structure. For example, at all these points here, it signaled a divergence on the indicator, but at no time did the price manage to break the previous low after the divergence appeared on the indicator. In other words, it still has strength to keep going up. But now, pay attention to this case here. At this point on the chart, it showed a bearish divergence, and notice, up there on the chart, we have this low right here. From this moment here, the chart managed to break through that previous low, even with a bar that showed rejection of the upward move and ignition for the downward move. From that point, you could have taken a short trade by placing your stop at the high of that candle, which means about a 0.3% stop, and you could set your target 2 times lower, that is, 0.60. And we can see that at this point here, the chart would have already hit your take profit. Another way to use this indicator is also to understand when the market is very overbought or oversold, as I explained before, through this red zone and this green zone. And we can also use classic support and resistance levels. How are we going to do that? Notice at this moment, in this part of the chart, right here, we have a resistance zone. We can see it because the price touched it a few times and then pulled back. However, when it got there and was also, according to the indicator, in an overbought zone, we can wait for the first bearish engulfing candle to open a sell order, betting that this resistance will hold and not be broken. In other words, at this point here, the engulfing pattern happened, so we can set our stop a little above this last high at 0.14% and aim for twice the return to the downside, around 0.3%, which would be reached right around here. In summary, the moving average Z-score suite is more than just a simple moving average. It combines statistics, divergence, reversal zones, and a single visual panel, ideal for those who want to trade with more safety and clarity. Try it out on TradingView, see for yourself, and if this content helped, leave a like, subscribe, and comment below. This content is for educational and informational purposes only, not a buy or sell recommendation. Analyze, consult professionals. Thanks, good trading, and see you in the next video.